Over 35 years of trading, I've learned a really simple and fast way to analyze any stock. And really you can apply it to commodities, currencies, cryptocurrencies, that sort of thing as well. So today, what I'm going to do is show you the basics of how I analyze stocks. It's a fast method. You can analyze anything in 10 seconds or less. And it starts with a few basic principles. And it really comes down to recognizing that the fundamentals drive a stock's performance. However, to do fundamental analysis is time consuming and it's also requiring a fair bit of expertise. Now, I don't have expertise on every industry, every sector of the market, but there are people that do. Within every stock, within every market sector, there are experts. They know the most. And what I prefer to do is follow what they are doing. And I do that through a stock chart. I'm not a typical technical analyst. I don't use really indicators other than my own indicators. So you won't see MACD and stochastics and those sorts of things on my chart. And not to say that they're bad, I just think we can keep it simpler than that. To analyze any stock quickly requires applying an understanding of 6 basic concepts. They are optimism and pessimism, price volatility and abnormal activity, and support and resistance. And if you can understand those 6 things and how they connect to one another, you can really get good at analyzing a stock. So you see here on the screen, we've got that list. Keep it simple. We also want to be aware of trend. And of course, you've all heard that saying, the trend is your friend. And I'll show you what I mean on this next slide. So what we're going to do now is draw a little picture. And this is how the typical stock moves. So you'll have a stock that's in a downward trend. And typically it'll base. And when it bases, what it's doing is breaking the downward trend line. So it first breaks the downward trend line and then builds a rising bottom. And you'll often see it go sideways for a bit and then move up from a rising bottom. That is one place to think about buying the stock. You never want to buy a stock when it's in a downward trend. We can say that this stock is pessimistic because the tops are falling in a downward trend. We only want to buy stocks when there's optimism, which is when there's rising bottoms. And so when you see the stock start to move up, it will make rising bottoms. So this is optimism, this is pessimism. Now the next concept that you have to understand is price volatility. When the stock is moving downward or upward, the price behavior is volatile. And we can say that because price is changing day after day as the market moves in a trend, either a downward trend or an upward trend. But when the trend is sideways, then we've got a neutral, low volatility market. And so that's the second concept. Sideways markets where you have a compression of volatility. In other words, volatility is diminishing over time. That is the ideal situation for looking for a breakout. When we get a breakout from low volatility, that's our first buy point. And it's important that that comes from optimism, that we have a rising bottom first. I'm going to show you some charts in a minute where we'll emphasize these points. Now, the next thing we want to be aware of is trend. If the trend is up, the stock is good. But when price runs away from the trend, when it's far above the trend line, we do not want to be a buyer because the market is emotional and overbought. So we want to see stocks that, let's draw another picture here. We want to see stocks that have based, are building optimism, break out from low volatility with abnormal activity. Typically, you'll have stronger volume on that breakout. That starts the upward trend. We never want to chase price when it runs away from the trend line. We want to buy it when it pulls back to the trend line and breaks the pullback. So this is buy point number 1, and this is buy point number 2. We either want to buy breaks from low volatility or breaks of pullbacks in an upward trend. We never want to buy pessimism. It's very tempting for people to buy pessimism because they think, oh, the stock is cheap. It used to be $20 up here. Now it's $10 down here. It's got to be a good bargain because it's half price. No, you want to wait for the trend line to be broken, for rising bottoms to build, and then a break from low volatility, from optimism, starting the trend. All right, so let's look at some charts and we can figure this out. This is a chart of BlackBerry. Now you can see that from here, the tops are falling, but then they start to rise. And then we get a breakout through resistance with abnormal price action, with abnormal volume, from optimism after pessimism was broken, through resistance from low volatility. And that stock right here went from $2.90 to $4.20, $4 on Friday. Now, I don't know anything about BlackBerry, but what I know is the people that know the most are the ones that create this chart. They're the ones who are selling the stock when it's moving down and then starting to accumulate the stock when it's going sideways and then making that abnormal price break to the upside with abnormal volume because they know something positive is coming with the stock. Let's take a look at another example. Let's try LUNR, stock that's done quite well. I'm also going to show you how this works with short-term trading. So here's LUNR, stock that's done obviously very well. And you can see here that the tops are falling, so the sellers are in control. We do not want to be a buyer when that's happening. Now notice that the Stockscores indicator, this green line, which I call the sentiment stock score, is very low there. All right, so the fact that it's below 60 tells us that the sellers are in control. If you are looking at daily charts on my website, stockscores.com, pay attention to the stocks that have the sentiment stock score above 60 because that tells us that the buyers are in control. Now, the algorithm that calculates that, one of the things it looks for is, are the tops falling or are the bottoms rising? You can see as the bottoms are rising, we have an upward trend and the stock scores are in that positive zone. Now with this stock, we want to wait for there to be optimism. So there's optimism here because we have a rising bottom. There's a breakout there. The problem with this breakout is it's too far above the trend line, and that means it's likely to pull back because it's overbought. The better breakout is this one here because we have compressing price volatility. It's sideways trend, and then it breaks with abnormal price movement, abnormal volume. You see the stock scores spike up there because they're looking for that. That's our buy point. Now here's our trend line, and when price runs away from the trend, do not be a buyer. That's where emotional FOMO traders are buying. When it pulls back to the trend line and breaks the pullback, that's another buy point. So we have buy point number 1 here, buy point number 2 here. Do not be a buyer here because you're far above the trend line and price is likely to pull back. Now I'm going to show you one other short-term trade. This is a stock that did really well on Friday. So this now is a 5-day, 5-minute chart, and you can see that the tops are falling through here. And then the downward trend is broken there from a rising bottom. We get sideways trading. We get an abnormal price break from optimism, from low volatility through resistance with abnormal price movement and abnormal volume, and the stock goes into that very strong trend. Obviously a very cheap, low price penny stock, but still on a percentage basis in one day, it gained about 50% from that breakout. So keep those principles in mind. Support resistance, optimism, pessimism, price volatility and abnormal activity, and then always consider the trend. If price runs away from the trend, wait for it to pull back. Don't chase price as it runs away from the trend. We're going to apply these thoughts and ideas to the market now, the overall market. Let's figure out, is the S&P going to go higher? Is the NASDAQ going to go higher? So let's jump into some of those charts. We'll start with the S&P 500. And here you can see the daily chart. First question, who's in control, buyers or sellers? Well, the bottoms are rising in general. We've had a little bit of a short-term swing with falling tops, but of course, generally the bottoms are rising. And therefore, the buyers are in control. If I go to the 3-year weekly chart, I can see that we're in an upward trend, so it's bullish. If I go to the short-term chart, we get a little bit of a different picture because we had these falling tops. But on Friday, the cycle of falling tops was broken, and we're starting to build rising bottoms again. We do have resistance up here, and so that's where the market will likely get stuck in the short term. But it is a market that looks a little better this week. Let's take a look at the NASDAQ. QQQ, very similar chart. 1 month time frame, Also breaking that cycle of falling tops, 3-year time frame, upward trend. So bullish long term, and I would say neutral short term. What about the small cap stocks? IWM. Let's go to the 1 month first. Still falling tops here, giving way now to rising bottoms. If we can break through this resistance, then the small caps look better. It's a little better this week than it was last week, so now it's a neutral market. Let's go to the 3-year chart. And you can see on the 3-year chart, we do have rising bottoms, so the buyers are in control. I can draw a trend line, and that trend line is intact. How about the Canadian market? T.XIU. And let's go to the 1 month. Pretty similar to the small cap US stocks. 3-year, still in an upward trend. It ran away from the trend line. So there's our trend line. It ran away, it pulled back, just like it did here. It ran away, pulled back, runs away, pulls back, and then it can continue the upward trend. So still a market that's reasonably healthy in the long term. How about gold? GLD. Here's a market that was going parabolic, which means the buyers were enthusiastic. It went parabolic. It ran away from the linear trend line, pulled back to it, and now it's kind of bouncing along that trend line. It's not bad, but I think if we look at the 3-year chart, what we see here is this break of the pullback that should lead to a resumption of the long-term trend. If instead it moves below this floor, then we will have a breakdown from a falling top, and that would be negative. Hasn't happened yet, but that's something to watch for. One of the most interesting charts is the oil chart, USO, because it's had a really strong run the last 2 or 3 weeks. If we go to the 1 month chart there, you can see that in the 1 month time frame, where each bar here is 2 hours, the buyers are in control because we have rising bottoms, upward trend. In the 3-year time frame, it's moved up, but it's now hitting resistance. So just going back to those 6 principles again. We've run up to resistance, we got stuck. And now we have to wait and see if it can break through that level. If it does, then it'll get stuck up here at that level of resistance. Let's take a look at some currencies. US dollar is still in an upward trend. You sort of have to ignore this gap here because this is like a dividend that gets paid out, but the trend generally is up. And if we look at the 3-year chart of the US dollar, trend is up, but it is sort of fighting with this resistance from over here. You could argue it's probably a little bit above that. So bullish on the US dollar. How about Bitcoin? Had a big week for another new cryptocurrency, some sort of Trump coin, and that brought a lot of excitement to the crypto market because that particular meme coin did really well, huge market cap already. But the chart of Bitcoin is stuck underneath this resistance. It's volatile, which means it's difficult to predict. So the trend, if we look at the 3-year chart, is still up. The buyers are in control, but it's volatile in the short term, which makes it more difficult to predict. TLT is the bond market chart, and you can see that it's been in the control of the sellers. It's broken this very steep downward trend. It may come up to this downward trend line, but until it can start to build rising bottoms, we have to be pretty cautious. Notice the sentiment score on the bond market, very low. And that's because that's a very weak market right now. However, what's encouraging when I look at the 3-year chart is we're coming off of this low point here. And that could be the support zone where the bond market starts to move up. And why is that important? Because if the bond market's moving up, then that means interest rates are moving down. It hasn't happened yet, but we're seeing a little bit of a sign that it's likely to happen. And so we'll keep an eye on that. So my ratings then, you can see them there. Neutral in the short term for all the stock markets. The only one that's not bullish long term is the US small caps. It's kind of right on the edge. Gold neutral and long-term bullish. Oil long-term or short-term bullish, long-term neutral. US dollar bullish in both time frames. Bitcoin short-term neutral, long-term bullish. And bonds in the short term, I raised it this week to neutral because it is showing signs of trying to make a bottom, but still bearish in the long term. All right, now it's time to look at the trade of the week. Same principles, just applied to a very short-term chart. And you can see that using this, you can be a long-term investor using these principles, but also a short-term trader. Now for short-term trading, I've developed my own indicators and that sort of thing, which help with reading these. And one of the things that I've created is this indicator called an action candle. Remember I said that we want abnormal breaks from low volatility. Well, anywhere there's a pink and yellow dot, that's an abnormal break. And then we determine if it's from low volatility and from optimism, which is exactly what happened there. Because we had rising bottoms, which is optimism, and we had resistance. We had a sideways trend, which is low volatility. We broke out, strong volume, and the stock went for a nice run from about $7 to nearly $10. Now, if you want to learn more about what I do, go to Stockscores.com and go to the homepage. On that homepage, there is a link right here to activate a free weekly email newsletter that I send out every week. You can register for that there. And if you want to learn more about my indicators, my courses that I do, you can learn more about that at Stockscores.com as well. Hope you've enjoyed this week's Market Minutes. If so, click on the like button, subscribe to the channel, and most importantly, trade well.